Welcome to the Ideal Investor Show. Join us on the journey to financial success. Let's go.
Hello and welcome to another episode of the Ideal Investor Show. And today I want to talk a little bit about property taxes. And this is triggered by something that has happened recently because the property taxes that were calculated in the pro forma, basically in the estimate of the seller or of the company, the real estate agency that was selling a property to one of our clients, was significantly too low. And what do I mean by that, significantly too low? Let's take an example where you're finding the property, everything looks good, the sales price looks good, the expected rent looks good, the status of the property looks good, the price, everything is fair. And then obviously a calculation is started to say, okay, so how much cash flow would we actually get out of that? And let's just say the estimate is that the property tax is $1,200 a year. So that would be $100 a month. And then when you get to the closing table and the title company has actually evaluated and talked to the tax authorities with the actual price that you're going to pay, because that will be the basis for the property tax. And now your actual property tax is going up to $2,400 a year because it's now recalculated for the sales price. Well, when that happens, that is basically $100 more per month of expenses. Now, yes, you can obviously use these expenses in your tax return, but on a one-to-one comparison, if you were looking at a property that had, let's say, $250 of positive cash flow when you first looked at the pro forma from the real estate agency, and now you have your closing documents in front of you and you see the actual numbers, and it is only down to $130, that is obviously concerning. Now, we always, and I've always said that, we only want to really buy properties that have positive cash flow from day one. But why is it relevant to look at this and really be very clear before you sign on the dotted line? You have to keep in mind that it's not just that property taxes have gone up. It's not just that the prices for houses have gone up. It's also that the cost to get anything repaired if something breaks has gone up a lot. In my experience, if I look at my portfolio right now, I can say what I'm seeing basically whenever there are any kind of maintenance calls, most of the time, the cost is something like $200, $250, $300. Even for simple things like fixing a pipe under the sink or a leaking faucet or stuff like that. I mean, I learned the other day that there are now handymen in Ohio that the charge to the owner is $75 an hour. I was actually tempted to say maybe I should become a handyman. That's a $150,000 salary if you work 2,000 hours a year, which is a normal employee's amount of time, right? So is this all realistic? Is this all going to continue this way? I don't know. One thing I can say is when we have only $150 positive cash flow on day one, and there are a few repairs in that first year, the overall cash flow may be very minor. I want to make you aware of the necessity for any investment that you might do, and I do this anyway with our clients, right? But not everybody who is listening might necessarily work with us. If you work with somebody else and not with our team in our community, then please check the numbers in the disclosures before you have your closing and be absolutely sure that you know how much is really at the end coming into your account. One other thing in the same context I would also like for you to become aware of, because I've recently seen a few times where there's a little bit, I don't know if I would call it an omission or cheating. It's up to you how you want to declare it. But what I'm getting at is, and what's happening is that pro formas are being created by real estate agents that do no longer include maintenance, vacancy, and capital expenditures. When I first started, and I'm still doing it today, I always say you should take 5% for vacancy, 5% for maintenance, and 5% for capex from your rent income. And then look if you still have positive cash flow. So if you see a pro forma where those numbers don't exist, those entries don't exist, those 15% are not deducted, and your positive cash flow is relatively minor and small, you should be worried because you might end up with a situation where you just barely break even. Now, I also want to make you aware of the flip side of that same coin. And that is, we are in a situation right now in the market in general for residential real estate investing where it gets harder and harder to find properties where with our currently elevated interest rates, we can be cash flow positive. Because you have to look at how much more expensive have the houses become and how much rent can you actually get for it. So that is something to be aware of, and I think we really need to be very vigilant and make sure, that's my message for today, make sure that you know all the numbers before you sign at closing. And don't forget that you want to be at least slightly cash flow positive from day one. That's the important message here. So be well and stay safe, and I talk to you tomorrow.